Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Roger Holman and Neil Insull.
Welcome to The Tax Factor, your weekly roundup of the latest developments in UK tax. It's a big week this week as Rachel Reeves has just announced her spending review, and it's great news all round as she's announced austerity is over. Sadly, it's podcasts like ours that play Debbie Downer and ask where's the money coming from, and ask, as Richard Tice did, is spending out of control? Usually, we wheel out the heavyweights like Robert Salter, Heather Self or Nimesh Shah to cover such momentous fiscal events, but by a fluke of scheduling, you're left with Neil Insull and me. Neil, welcome to our most momentous podcast together.
It is a huge privilege and a pleasure to be hosting this podcast on your very final episode of the podcast. Let's make this memorable for our small audience of 5 people.
2 of those are us.
What are we going to talk about today, Roger? Tell us.
Well, why don't we have a little chat about the spending review? We won't spend too much time on it because it was about 2 hours ago that it was actually announced, so we've not really had a chance to think about it.
I think even if we did digest it for much longer, I think people would be quickly turning off. So we'll spend a little bit of time on it. But yeah, what else are we going to be talking about?
The old media favourite of winter fuel, and I think we might link that into our podcast favourite of high income child benefit charge. There's been a few reports about unemployment going up. And then, Neil, I think you came across an interesting darts story.
I did. I'll save that to the very end, but that's definitely newsworthy and a salient tale about a famous sports person who probably didn't pay the right amount of tax.
How very rare. Well, let's start on the spending review, shall we? According to the stats that I've got in front of me, Rachel Reeves has decided to increase spending pretty much everywhere. So the UK is increasing defence spending to 2.5% of GDP by 2027. It's going to pay for a public sector to increase by 3 to 5% in the current
I thought you were going to say
year.
Public house for a minute, but no, public sector. I thought
That's just our dream, Neil.
It would be our dream, but yeah, public sector increase.
There's going to be an expansion of free school meals, which will cost another £1 billion.
And taking 100,000 children out of hunger and poverty, I think, is some of the stats which were mentioned.
It's a fantastic objective, and I'm all for it. We just need to find the money. There's plans to invest in Britain's renewal, whatever that means, by spending an extra 113 billion on infrastructure like energy, nuclear power plants.
Yeah, nuclear power, definitely on the agenda. Quite a lot of money being spent there. I think that also includes 39 billion over the next 10 years. I mean, if we can look that far forward, I mean, I may well be in a box 6 foot under, but by then. But on affordable housing, so 39 billion on affordable housing. I think that's something people wanted to hear about, certainly in the property sector, particularly as there's this aim to build 1.5 million new homes by the end of the Parliament. So that may help towards that.
Wasn't there an aim to build 1.5 million homes at the end of the last Parliament as well?
Probably every Parliament, but I think they've built about 80,000 so far or something. It's remarkably shy of the target. But look, this 39 billion.
So
39 billion is not an insignificant sum, and any money towards the property sector is to be welcome. It's something that I look at quite frequently. So a big cheer for that. We'll see how it's spent. But I think also the NHS is a big beneficiary this year or over the next 3 to 4 years. Big infrastructure spend plus a real terms increase of something like 3% plus inflation over the course of the next 4 years on departmental spending. So a lot of money going into the NHS, probably all going to get wasted again as it normally does. That's a personal view. And but billions and billions being spent, which asks the next question, given that this is a tax podcast. Rog, where's that money coming from?
It's a really difficult answer. because I don't know, and
That's
I
it.
don't think
Stop there,
any
Roger.
political commentators know either.
I think it's impossible to tell at this stage. I think everyone is saying, apart from there was no mention, obviously, this afternoon in Rachel's speech about tax rises. We wouldn't expect that. But Mel Stride, who was speaking on behalf as Shadow Chancellor, he was mentioning where is all the money coming from, and said about tax rises that this was going to be a cruel summer of speculation. Roger, you're not going to go into song, are you now?
I was tempted to jump into it's a cruel summer.
Can I stop?
But
Stop.
I don't think I'll go any further.
Thank you. But yes, tax rises, we have no idea, but there is strong speculation that someone's going to have to pay for this, and it may not just through increased borrowing by the government, but maybe by further increases in tax, even though Ms. Reeves has categorically said no tax rises in the future. So I don't know where her career stands if come the budget in the autumn we get significant tax rises, particularly if it affects the working person. Let's leave that until a future podcast. But just in terms of spending, it might be just worth mentioning that the HMRC was mentioned, and given our focus on tax, what is the spending expected with HMRC? Well, they're expecting a real growth increase. So 1.8% real growth in spending over the next 5 years. I think there have been previous announcements which were reiterated again today in terms of increase of numbers coming into the revenue. So 5,500 compliance staff by 2029-30, plus another 2,400 debt management staff. And this will all cost around about, I think, just over $1 billion or something, but they're expecting to raise 7.5 billion to plug some of the tax gap. Anyway, these are aspirational figures. I feel they are hopefully going to put some money into the revenue, which is much needed, and also make it what's called a digital first organization, which essentially means AI will do all the jobs of existing staff. No one will be sent letters. Paper will become a relic of the past, and it's going to save lots of pennies, which will go into, I don't know, more medicine for NHS, which is where most of the budget seems to be going these days.
Sounds really good for people like you, Neil, those digitally excluded people.
Did you? I thought it was people who needed medicine. I thought that was where you were going with that.
There's those as well. I mean, talking of people in your generation,
yes,
there's something else that Rachel Reeves is spending quite a bit of money on, and that's the winter fuel payment U-turn.
Oh my word. Tell us the saga about winter fuel payments, Roger.
I think it was about 3 weeks into Labour being elected when they decided that they were going to scrap the winter fuel payment, but only for pensioners who were not in receipt of pension credit. And I think to be in receipt of pension credit, you had to be receiving some tiny amount of money. So there weren't very many pensioners that actually still received the winter fuel payment.
Okay.
Now they've decided that that wasn't such a good idea after everyone complained, and they've changed their minds. But instead of doing it in a well thought out, carefully planned way, they've decided that if a pensioner earns more than £35,000 a year, they will have their winter fuel payment clawed back through tax.
Tax?
Yeah. I mean, it reminds me a bit of the high-income child benefit charge.
Yeah.
This was introduced back with the Tories.
And it has been mentioned a lot on the Tax Factor in the past. And I think any listener who has listened to those many podcasts will understand our frustration with the child benefit allowance.
I mean, the simple fact is the tax system shouldn't be used to claw back benefits. It's crazy.
Crazy. Are you going to break into song again, Roger, or not?
A bit of CeeLo Green.
Yeah, but crazy. Absolutely crazy. I mean, we should say that there is an opt-out, but I mean, we're talking about pensioners. We're not talking about people who are getting child benefit who might be a little bit more savvy about all of this. We're talking about pensioners who, have no interest perhaps in the tax system, or no interest in actually thinking about the opportunity to opt out, or have getting the right information to opt out. So yeah, it's nasty. And these tax payments aren't that great. I mean, the amount of administration over fairly small sums of money is just crazy, as you say.
I think the winter fuel payment is only £200 or something.
It's something quite small, isn't it?
It's some very small amount. And as you say, the administration of HMRC trying to chase down £200 debts is really absurd.
So anyway, it's another unfortunate further complication in the tax legislation and administratively, all thought out. But I guess, they've backed themselves into a corner and they're just trying to find a way out of it. I mean, it's going to cost them 1.25 billion, I think, in terms of this.
Maybe they thought they were going to get some of that tax back from the increased national insurance contributions. But I think some news that came out this week might dampen those thoughts.
Shall I get on my high horse again? I mean, anyone who's listened to me on these podcasts before will know how upset I get when I refer back to Rachel Reeves' decision to increase employers' NIC. So they've increased the employers' NIC with effect from April to 15%. They've messed around with the allowances, so there's more people paying more NIC at lower levels of salary. It's a big tax riser. It's worth 25 billion to the Exchequer. I think a lot of commentators have been pretty unhappy about how that's been delivered in terms of the messaging about who should bear that cost. And of course, you'd have thought employers and not the working person is the incumbent essentially picking up that cost. No, that's not the case. Of course, or not always the case, is that the person who lands on bearing the cost of employers' NIC is quite usually the employee who's being employed by the employer. It's the employer who wants to get rid of that cost and pass it on. And this is being seen, we know for sure, in terms of employment and whether employers are recruiting at the same levels they would have done were it not for this increase in NIC, and whether people are being laid off as well, and whether people are being promoted and all those sort of things just to keep down the level of employment costs. What was published the other day were the unemployment levels, and what we've seen is an unwelcome piece of news, which is that unemployment has hit a 4-year high of 4.6%. And there's a significant drop in the number of people paying PAYE, so salaried people, which is probably, again, corresponding with what we know about the employers' NIC rise. And actually, since the autumn budget, 276,000 people in the UK have lost their jobs. And nearly half of that, a third of that, were made unemployed in May alone. And we know that hospitality sector, the retail sector, those employing the lower paid employees in the UK are being hardest hit in terms of employment numbers, and also the number of vacancies has dropped sharply. And we're seeing more and more calls for reversing those NIC changes. I don't think we'll see any of those reverses. I don't think the government can afford to make those reverses. But again, unwelcome news about unemployment, and with many people seeing NIC as being the big culprit for that.
Don't think there's a lot more to say on this. I mean, the unemployment figures are really
shocking.
Especially when you see that May figure of jobs lost, 109,000 in 1 month versus 276,000 since the autumn budget. It's just huge.
Where do we go with that? Where's the happy news, Roger?
Well, the unemployment figures are supposed to be, they're predicted to be reducing over the next few months, but we know how good economists' predictions have been.
Well, let's hope so. I mean, there is some other good news is that as the wage increases are cooling down, we expect as a result of that, the Bank of England will probably reduce interest rates. So there is this sort of converse, is that the right word? Opposite effect, essentially, of the increases in NIC and the implications on employment may well mean that we see lower rates of interest in the months to follow.
Would be good. I think we'll move on from unemployment. It seems a little bit depressing. Let's have a look at darts.
Let's look at darts. So an interesting news item. I mean, darts has suddenly become the big sport. Well, I say that as a person who's reasonably interested in sport, and actually I've started watching more darts now that Luke Littler is becoming a bit of a celebrity himself. But the big news in darts this week itself is that Rob Cross who's a famous darts player. In fact, Rob Cross was a former world darts champion from 2018, so not that long ago. But he's got himself into the news for unfortunate reasons. He's been disqualified as a director of his own company. And the reason for that is it failed to pay over £450,000 in tax. Now, let's dissect this a little and understand a little bit more about what happened to Rob Cross. Rob Cross is his own company. He put a lot of his prize money winnings into this company. He had sponsorship deals. He put that money into there and so on. So it had a lot of money in there, over £1 million, maybe up to £1.5 million, I think. And all of that money was there for him to spend, he thought. Okay, so what he did was spend it. The way he did that was essentially take out a loan. Okay. And that's not unusual, obviously. There'll be many listeners to this podcast who will appreciate what owner-managed businesses do. They will often have a lot of money in them, and potentially the one way to perhaps temporarily remunerate the shareholders or the directors is to make a loan to the directors. So a director's loan account. And the implications for a director's loan account is as soon as you make that loan, or if that loan doesn't get repaid within 9 months of the end of the financial or accounting year of the company has to pay a form of corporation tax, essentially. So it pays corporation tax on the amount that's been lent to the individual. And that essentially is a payment that can get repaid as soon as the loan is repaid. Okay. If it's not repaid, it's basically treated as a dividend, and the individual is taxed on the dividend, and the company doesn't get a tax deduction for making that dividend. Rob Cross I don't think, knew about these rules. So Rob Cross decided to give himself a lot of cash out of the company bank account. And he didn't see that as a dividend. He didn't see that as remuneration, as salary. He just basically gave himself a lot of cash, didn't think about the consequences. But as I've said, there are tax consequences for making a loan, and also potentially if you don't make a repayment of the loan. And to make matters worse, the company owed a lot of money to other people. A lot of creditors needed paying, including the revenue. And in fact, the revenue needed a lot of tax to be paid. And in fact, the company paid hardly any tax at all during the time that he was a director of the company. So the numbers were, there were funds in excess over £1 million. The company only paid about $41,000 in tax between 2020 and 2023. His loan account was overdrawn at $423,000, and the company went into liquidation with liabilities of nearly $600,000. A significant mismanagement of his company. And as a result of this, he hasn't gone to jail. Okay, he's not been convicted of acting in any criminal or fraudulent act. He's been simply, he's been disqualified as a director of a company. He can't manage another company for the next, 5 years. So I think the moral of this tale, if I could provide you with my own thoughts on this, is that there seems to be a real chasm in terms of the difference between taking £500,000 out of a company, and basically the repercussions of that is simply that you just end up not being disqualified. There's no other penalty, essentially. He does actually have to pay the money back. Okay, he has to pay the money back, and if he keeps on winning, an arrangement where he has to repay the money back, and that's all been agreed. But that isn't necessarily the penalty. The penalty is that he's just simply been disqualified. There isn't anything to say that he has to do community service or anything like that. He and I think, I'm not getting at Rob Cross himself. I mean, he's probably been poorly advised. At least I'll assume that. But there's other people around who are probably doing this very knowingly about the opportunity to perhaps do things without feeling the real repercussions of actually stealing money from creditors and from the revenue. So I don't think we're necessarily going to see a massive change or any immediate change in the legislation, but I think it's an area of tax law and company law which sort of try to deal with it, but perhaps not as in the way that a man on the Clapham Omnibus would expect it to be done. So Rob Cross is still playing darts, and I think he won a game or two since the decision. I mean, good luck to him, and let's hope he pays back the 500,000 because we've got hospitals to pay for.
Rachel Reeves needs that money.
She does indeed.
Hopefully Luke Littler doesn't take any lessons from Rob Cross.
Let's hope not. Actually, I should do a company search for Luke's company and see what he's doing with his money.
Yeah, could be interesting.
The Tax Factor from Blick Rothenberg.
Well, I think that's about all we've got time for today, Neil. We've only had a couple of hours to look at the spending review, and if you want more updates and reaction, please check out our Blick Rothenberg website, which is updated regularly. As Neil mentioned, this is my last Tax Factor, and I've been told to say what an amazing job the production team do, especially when they're editing me and you down to this lovely podcast.
Indeed. And may I also, again, acknowledge your contribution to some excellent podcasts, whether it was me or with other people. And I hope we can speak to each other again, Roger, on a similar type of media outlet. Who knows?
Maybe I'll make an appearance on our sister podcast, Brave Business, or even a guest appearance on a Tax Factor.
Let's hope so. I'm not going to deny it. I mean, it's been a small pleasure. I mean, what more can I say?
Your faint praise is wonderful. Thanks, Neil.
So are there other presenters?
There are, and I think next week we've got a couple of other presenters joining the production team.
We do. We have the Blick Rothenberg's very own Thelma and Louise, Ellie Theochari, and Rihanna Earl.
Well, I think that's it. So it's goodbye from me.
No, sob. No, don't go, Roger. Don't go. Yes, it's goodbye from Roger, and it's a goodbye from me.
Have a great weekend, and goodbye.
Did you have tears in your eyes? I've got a slight tear. It's the tightness of the